Hello everyone, my name is Marcello Kolax and today I'm coming to you with a very special video. So I rarely post during the week video, but I think today is warrants that a little bit because I had a lot of conversations with a lot of traders about what happened yesterday on the TTF front month contract, that is the Dutch gas front month contract. Because it was a quite a volatile session, people moving in and out of the markets and being thrown in and out of it, because yeah, it wasn't all that clear. The direction wasn't all that clear from the first go. So now that the dust has settled, I just want to very quickly talk about where we are, how TA could have helped, what the limits are of technical analysis. So just a little update video for everyone. So first things first, I want to show you where we are in the long term. So we can see that from this long downtrend, we have now made higher highs and higher lows since mid-July, and we are now stuck here a little bit. So the market is resisting to move above 43.55. Overall, as you can see, I'm still fairly optimistic about the market eventually going to the 200-day exponential moving average, which is right now near 56. Why do I think that? Well, because volume is moving lower on the down legs, on the corrective down legs, and volume is increasing, or solid at least, on the upswings. This year was a little bit of a special case because probably there was quite a bit of short covering. But even here, can you see how the market is swinging gradually higher and gradually lower in the down legs? Also, momentum is fairly bullish, maybe unsustainably so, but for now it's still going up. And although we are not making any exciting moves on stochastics, the lows are still pulling higher. Just this here worries me a little bit. So next thing, we have to break above 43.55. So with this mindset, I went into the markets yesterday, and we did have on the hourly chart, so I always recommend zooming out. So you can see, okay, daily chart, bullish, but we are struggling to move higher. Okay, so what's happening on the hourly chart? Okay, so we can easily draw in this trend line. Let's make this a little bit more pretty. We can draw in this trend line that helps us hopefully guide price towards new highs. It also helps us to make better decisions. Okay, we haven't touched that for quite some time, this support level, so we can draw in a steeper trend line. So we ended up with this sort of thing. We can already see that this trend line is not right for this time frame. Just a little tip: if you start seeing the just connecting more or less a straight line, like this here for example, then you're in the wrong time frame. You want to see some bounces. So obviously, in order to make to draw in this trend line, we want to be, let's have a look into the 15-minute time frame. Now we get our swings. So now we're in the right time frame. So we did start yesterday's session at hold on, yeah, somewhere so in this area, and we did start fairly optimistic. It's good. So we are moving in line with this uptrend. So but since the move has already continued quite a bit, probably we wouldn't have jumped in long here just for the market to decline possibly until here. So if anything, I would have looked for buying opportunities here for the market to continue higher, because in an uptrend we are looking for the upswings because the down legs are a little bit shorter. Okay, so I would have waited this out probably a little bit. I did wait this out a little bit, and we see the market decline. And here we would have liked to see maybe a bullish stochastic or a little bit of a bullish reversal candle. But for the first time we go, oh, we are crossing below the MACD signal line. So this is a preliminary bearish signal, nothing to act on. But we also didn't get a bullish signal on the stochastic. What is happening here? And we did break lower. And I wouldn't have get spooked by that. I would have thought, okay, I'm still fairly bullish. And what I'm doing is I draw in a support level right here, because as we all know, for a downtrend to happen, we want to see lower lows and lower highs. And this is the most recent low. So the market does continue lower, and we do find support at this area. And I think, so I was right not to go bearish here. What I want to see for bearish confirmation is 2 consecutive closes below it, and obviously this isn't happening yet. And the market starts moving higher, and I'm feeling a little bit confirmed. And okay, so this support held. But what's happening here? We are still not really making a higher high. Now this old support level may act as resistance. So that's my first kind of thought. So if this holds, then it's more likely for the market to continue lower. But as the day evolves, we see that, we are not even hitting this. What is going on? So I'm drawing in my second trend line here, and not like this. Let's remove this. Okay, there you go. I'm drawing in my second trend line here, and we can see, okay, so this is already like a really tight range, so probably there's not much value in that. So I start going into the 1 minute time frame to make sense of that. And here, by the way, it is this. So you would be at this point in time. But then I'm reminding myself, I don't really want to trade in the minute time frame, that because the market can be a little bit more volatile here. It doesn't mean that TA doesn't work on the minute time frame. It works excellently on the minute time frame, but I'm doing everything manually. So I am the trader pulling the triggers and analyzing the market. So sometimes the market can move quicker than I can act. And that has nothing to do with TA, it has to do with me. So if I was a little bit more automatically set up, I'm just speaking on behalf of some of my clients, the people I talk to, then maybe I would be trading in the minute time frame. But let's stay with 15 for now. So we can see that at this point in time, still nothing is happening. But I do see that here at this point in time, we do hit support twice. So what do I see? I see a head and shoulders pattern. We have a left shoulder here, a right shoulder here, and a head here. So I have the labels prepared already. It's like we're in a cooking show here. Putting this out of the oven. Get the head up here, the shoulder here. And the good thing with head and shoulders patterns is what they do is they help us identify peaks, and they give us downside targets. And that would make sense, right? So we're only looking at head and shoulders patterns at potential peaks. That's the case. If we look all the way back, we see the level has been hit once, twice, and now a third time. Yesterday, this was also an upside target for a falling wedge. So this here worked out very nicely. So this obviously is an important level of resistance. And we do have a reversal pattern. So I'm saying now, okay, so if we push below this neckline of this head and shoulders pattern, then I go bearish. What counts as a confirmed break lower? 2 consecutive closes. Then the next step is, okay, I'm not putting on a trade yet. Let's talk about risk management. That's the next big thing. So we understand that the head and shoulders patterns gives us, we measure this distance here between the head and the neckline, and we do get a target. We do get a target. Just putting it here. This is well, it's not very pretty right now, but let's say put it somewhere here. So we can apply this distance and put it then whenever we break lower. So in our case would have been here. So this is the potential target. Can you see I'm measuring this distance and just putting it to the breakout direction? Okay. Then the next thing, okay, so where's my stop loss? When do I know that I'm wrong? Well, there's two ways of doing it. You can go, depending on the volatility, but here it would make sense, 2 ATR, average true ranges above this level. Or you could just say, okay, essentially, if I break above this point here, then probably I'm out of it. So I have this prepared. I'm just putting this here. Yeah, it's a little bit more of a wider stop. And then we look at that, and then we say, so this much risk for this much potential reward. So it's like a 3-to-1 ratio risk reward, 1-to-3. So that does make sense, right? So this would be a good solid trading setup. Then you can see I've talked for like a couple of minutes, and I haven't even looked at the tools once, because the tools are only secondary. They only confirm what's already on the chart. So we do see the market, okay, bounce off, all right, nothing happening yet. We do see, aha, what is this? We do get our first MACD bearish signal, because we are moving below this 0 line. We are firmly in oversold territory. That's good. That's good. That's nothing to worry about. Doesn't mean the market will go up. And we do see this here happening. Oh, this little bit. Let's remove this for clarity. We do see this here happening, and here we would have 2 consecutive closes below this trend line. Before this neckline, we get a bearish signal. So everything essentially, we have a bearish reversal pattern. So the market is in favor of the bears. If we put on the exponential moving average, even let's take something a little bit wider. So this is 50. Sorry, narrow. Let's try 10 just for fun. We can see we have clearly switched from the moving average going above the candles. So that is some resistance there. So yeah, this looks like a good signal. And then the market progresses in our favor. We retest this a little bit. Ooh, okay, getting a bit worried, but nothing too crazy. And then we move all the way up here. So if you put your stop somewhere in this area with like 1 or 2 ATR, then you would have been thrown out immediately. Then, if you would have put it a little bit higher at the shoulder, you would still be in a bearish trend right now. But do you really want to exit the day with after such a volatile day? Probably not. Maybe you do. So either way, I also would have thought, okay, so this head and shoulders pattern clearly failed. We moved back above the neckline, so I would have liquidated immediately my position. So in this case, what we have identified as a very good setup didn't pull through, and that is fine, because the risk-reward ratio was good. And in technical analysis, or in trading in general, it's not about like being right all the time, right? It's about being wrong earlier than everyone else and being right for longer than everyone else. So let the good trades run and be wrong quickly, and so that there's very little drawdown. And I would take this trade any time of the day, right? If we got the potential gains were significantly higher than the loss we have experienced. So I wouldn't sweat it too much if with your good stop placement. And that's what TA is for. It's a risk reward, it's a risk management tool. That's what it is. Okay, so now this here has clearly failed. So for the day ahead, oh, now I'm doing a little bit of a day ahead analysis. Okay, so this is very unusual of me to do this. I think I rarely do. So what do we have now? Okay, so obviously we broke below this trend line. We are still in the 15-minute, by the way. We broke below this trend line, and we are making lower lows and lower highs, but it's shifting lower like really, really slowly. So the first thing that I do is I try to draw a channel onto this. And we do see that, yes, the market is acting in accordance with this descending channel. We did get quite a few hits. Where you go? There you go. We've got bam, 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 bam. And now the question is, I mean, of course, I hope very few of you would be trading the first couple of the first bit of the session. Let's see the market play itself out. But I'm wondering, if we remain within this descending channel, then maybe there's a chance to make it all the way to this trend line, which becomes especially important on the hourly time frame again, right? So are we going to make it down here? Well, the first hurdle that I see is actually here, this support level near 34. Yeah, so there you go. Yes, 34.07. So this would be the first big support on the way lower. But can you see on the hourly chart we are still bullish? On the daily chart we are still bullish. So what we're experiencing here is probably just a little bit of a smaller downside correction. And that's, once again, try to trade with the trend. Try to trade with the trend. So looking for up legs here. Doesn't mean you can't profit from these smaller down legs if you go in a small enough time frame in order to actually make some use of it, to get some earlier trigger signals. But yeah, look out for all of this. I would be a little bit careful. A break above this channel would worry me a little bit in terms of downside continuation. And can you see how not once I try to predict the market? I should have said this at the beginning. If you are still here, this is a 15-minute video, so good on you. We are not trying to predict anything here. Yeah, TA is not a crystal ball. As you can see, I just scrubbed through the market. I just took it one candle at a time, and always trying to look for the best possible setup. And that is what TA is, and it does work on every single time frame. It could go into the minute, 15, 1 hour, daily chart, weekly chart, monthly chart. It all works. No predictions. We are just taking it one candle at a time. Cool. Have a good day ahead. This will be an exciting session. Don't be too, be worried. I don't know, be cautious about this uptrend here not working out, because as a technician or as a trader, you're never married to a view. If the outlook changes and we start breaking below 33.68, then of course I would adjust my bullish view towards 56, 57, yeah? So I want this to play out, and that's how we take it, like one step at a time, and I have no problem correcting my view if it means that I'm helping more people out here. Cool. Thank you very much. Everyone have a great day ahead, and see you around. Bye-bye.